Why property, you ask? In this video, we'll look at why real estate is a very powerful way to build wealth in your portfolio. 6 main points here. Real estate provides steady rental income. It also provides strong capital growth. It is an inflation-linked asset. It is easy to understand. It provides depreciation and tax benefits. And it is a great way to leverage. First of all, we'll look at the steady rental income. Basically, rental income usually grows over time. You can lock in long-term contracts as well of over 1 year, which means you have reliable income coming in. This income can be used to cover the costs of holding the property, and any excess income can be used to pay down the loan, or it can be used for whatever purpose you want to use it for. Real estate has been able to provide around 5 to 8% capital growth per annum over the long term. Double-digit returns are possible, and they are especially powerful when starting your portfolio. If you get double-digit returns early on, that means you can get to your second and third property much quicker. But usually over the long term, you'd be looking at 2.4 to 3.1% above the inflation rate as the expected rate of capital growth over the long term. Now, inflation is an increase in the level of prices of goods and services that households buy. And the inflation rate target is between 2 to 3% over the economic cycle. Real estate is an inflation-linked asset, and that means it can protect your portfolio from inflation over the long term if there is an increase in overall prices for household goods. And going back to the previous slide, with inflation being around 2 to 3% per annum and 2.4 to 3.1% above the inflation rate being the expected rate of growth over the long term, in the current economic environment, we'll be looking at around 5 to 6% capital growth. Real estate is easy to understand. We have all lived in a house, we have all paid rent, and we understand how income is created, and we know that house prices can increase. Then there are the depreciation and tax benefits. Newly built houses provide 40 years of depreciation benefits. Investors are also eligible for a 50% capital gains tax discount when the asset is held for over 1 year. Combining depreciation and this capital gains tax discount results in something we call a depreciation tax shield. And this is a very powerful way to reduce your tax bill when investing over the long term. Other classes do not allow you to borrow up to 95% of asset values, but property can. Leverage can be a powerful way to kickstart growth in your investment portfolio. And when you structure your lending correctly, you can purchase 100% of an asset without a deposit if you already own property. So in summary, when executed correctly, you can have stable income, steady growth, and inflation protection with an asset you can easily understand that will provide you with generous tax benefits over the long term. When you have found a high-performing investment, you can leverage into this asset so you gain more exposure earlier. This means you can experience growth sooner and at a faster rate than without leverage. You don't have to be born rich to get exposure to a high value asset.